Hey, it's Mack with PriceActionTradingSystem.com, and it's Wednesday. It's November the 20th. This will be our chart lesson for today. Let me back out here just a little bit and show you what I saw. I was treating this like, of course, this is FOMC day, and just like this is pretty typical. You'll have kind of a range day, and then the news will come out and you'll trend or sell off, or it'll rocket off, and it sold off when the news came out today. You can see that, and you got a nice channel working down with quite a few opportunities if you're still trading. And you can see the last hour or two before we went into the news, that's is what happens. Nobody's trading. The only people that generally trade during that time are people that don't know any better, and they're fighting it out between each other, and nothing's going anywhere, and it just bounces up and down. Best just to stay out. That's why I drew that in lavender, so we could talk about it and explain. That's what's going on. We're getting ready to go into the 1 o'clock news, FOMC news, and you can see that once it came out, I can't remember which bar. I think it was right in here. Came out right here, yeah. And that's why I've got that one. I mean, you got to be really quick to get that one, and and then it's even dangerous because a lot of times it'll shoot one way and then rocket the other. But the price action always works. So if you're reading the price action properly, and actually you can see that we kind of had that range right there. This was a little higher by that time, and we broke out. It's a breakout pullback short. So it's a little aggressive taking it because it's right there at the news, but if you saw it and took it, it's a great setup. But I really saw the range. You can see this was the overnight highs, this was the overnight lows, and it was kind of typical from what was left over from yesterday's range day. And so that's important to keep up with. And the only way to really trade these I was treating it more of a range day, even though we broke out here. And this is almost a perfect measured move. This is leg one, your little correction, and leg two. And there's a bigger channel there. And these are your minor channels within that. And so you just about have to use these smaller channels here and to keep you on the right side, and just treat it like a range day. And again, the clue is notice how prices are bouncing, on each side of the EMA. All through the overnight, you had two perfect measured legs down. You bounced right off the lows from the previous day across there. Had a failed second entry short, and boom. And you should have already been thinking when we came off those lows, we're probably going back to test this high and probably this high. And that's exactly where we went. And just follow this trend line until you get the break and the retest. This was really over a little bit like so. And you might have even, you might have seen the break here. Definitely closed right at it, almost outside of it there. New high, tried to go higher again. I thought it was too risky to go short. You don't want to be getting long right in here. And even this one, the only reason I like this one was because of the trap. And the fact that, you're probably going to try to test these highs here. And we got to a perfect test. You can see that it's just a perfect test. Actually, we came up one tick short. I was thinking it was a perfect test, but I was very tempted to draw that one in green, but I didn't, just simply because of the trap there. So let's talk about the trades, but that's what I saw. It's, I treated this like a range day until after the news, and so if you were still around after the news, you got a nice trend down, and this one was pretty easy to spot. Just drew it off those first two swings using the closes and worked out all day long. You got a little bit of a break here. This could have been up here, and you may not have even had a break. We may be just getting a break. But notice how we came up a little short there and then a little short there. Most people look like they were looking at this right here. You can see that. But let's talk about the trades, and we'll wrap it up. This was the first trade I saw. It was a failed second entry short. We were coming off the lows, and this was obviously a range day for sure at this point. Look how flat the EMA is. Look how we're on both sides. They trapped everybody to the short side. If you got trapped there, you just got to exit when it reverses. There's just no other way around that. This is a typical place. Notice how we didn't really get rejection off the EMA there. We pulled back and it's just hanging around there. On a good day, you're going to get rejection on a move. Notice how that bar bounces real fast off of there. There's a good rejection bar, even though it didn't go much higher. But we had a trend channel, and that was the first break. Notice how we came down there, and we didn't hang around too long. We bounced. Rejection just simply means that prices, this is not rejection, prices are hanging around in there, so you can see that. Got to be careful entering on that, especially, you know, if it's a range day. And so it's a chance to get long, not short, and I'm guessing a bunch of people probably, if you were trading, you might have got trapped short there. And if you do, you just reverse here or at least exit. And it was a quick, easy scalp. Came back again and gave you another chance to get in. I think it was a little too risky then. But you might have entered again even right there, because then you know, it's another little failed attempt to go lower above the EMA, and you don't know that it's going to rocket off like that, but it does. Nice trade. And then you get a two-legged pull back to the EMA, another little attempt to go lower. You really could have gone long right here above this bar. And this is one I'd like to use a limit order on here, and it would have gotten filled all the way back down to one tick into this, you know, one tick below the low of that bar, and then it turns up again. And even if you use a stop there, it was good. And easy, you know, it's good far as a scalp, and then you get this little overlap. It's congestion right here at these highs. That's generally not a good sign. You know, you don't want to be going short yet, really, but you don't want to be going long. And then you get this little channel working back down. You get a break. You tried to go lower twice, but there's a bigger channel here, and you can see that. It was pretty good, pretty obvious. You should have definitely had it by the time you got back to here, because if you just draw that off those first few swings and drag it down, you can see there. It's just a copy of that line. You drag it down and look. So you should have had it there, and you had your first bounce off of it. And that's really like a little two-legged pullback right there on a smaller scale. You can go long right there. Might want to use a limit order, and it probably would have gotten filled at least right there at the top once it broke above, and maybe even one tick back in, but definitely at the top of the red bar. You could have got a limit order filled, but it didn't matter if you use a stop or whatever. It got easy scalp. It comes right back, and then it bounces again. And there's also your support right across here. Notice all those matching closes across there, lows. Look, close there, 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 there. All those bars, that's telling you something. And then you get a little bitty doji. This is the one time you like entering above a doji, when it's at strong support or strong resistance in a trend, in a range, and it gives you a chance to get short right here, figuring that prices are at least going to here, and you never know what might happen. And of course, it takes a little while to work through there, but it was a fairly easy scalp. The scalp got filled pretty quickly, and any runners would have survived here. That's the good thing, right? You could have ridden this all the way to the top here. And I drew this one in green because it's getting back so close to those highs across there. But it's a failed second entry short, so there's a trap. And there's some other clues. Notice how all these highs are getting higher all the way up here. And the lows couldn't really go any lower. And then they're starting to get higher here. That's a clue you're probably going to break out, at least enough to get a scalp. And that's exactly what happened. So for a more aggressive trader, you'd probably take that trade right there. So that's why I circled it in green. I like the trade for the trap and for the other reasons I just told you. You go up, you overshoot the main channel. You try to go higher again. It was a break of this channel right here and a perfect retest of it, and turns down. So there's your second entry, and you figure you're coming back. It's a range day. You know, I'm treating it more like a range day really than, even though there's a channel here. And so there's plenty of room to get out. So I like going short there. Easy scalp. Any runners would have been safe. You could have ridden it all the way back down to here if you stayed with it. I didn't like, even though there's a failed second entry long there, if you took it, great. But I didn't like going short here because now this had been acting as resistance, and now it's acting as support. And there's a good chance it could bounce right there. But it did turn into be a trap. And if I think it's just too dangerous to try to go short right there, because 9 times out of 10 it's going to break lower and turn and go higher, and you're going to lose on it. This is the one time where you just have to watch it go without you unless you entered here. And, there's always an advantage to being early versus being late. And that's one of them. By entering here, you enter safely without being so aggressive, and you get the benefit of riding this all the way down. If you didn't exit right here, which might not have been a bad idea, just to exit any runners, because most of the time, even if it breaks lower, it's going to turn and go higher first. It's just one of those rare times where it went on down. And really all it turned out to be was a failed break out of the trading range. And you can see that because we tried to go higher all into the 1 o'clock hour, and it never got any higher than that ever again. It continued to act as resistance. It moved up a tick or two from where the original highs were, but not much. You might even call it right there by the end of the day. Usually I like to use the closes, so I kind of like it the best right across there. You get the most touches there and closes as well, so that's kind of where I like it, and that was the overnight high right there. And all these little moves out are just failed breaks higher. And if you want to be real aggressive, you could try to go short on each of those, but I just think it's a waste of time. You're better off just to stay out of this stuff and not trade it. I forgot to talk about this little long right here. I liked it because it tested this area again and it bounced instantly. And you're coming back probably to retest this breakout area, retest the EMA. So I liked going long there. It really, if you were following this short-term channel, it's really kind of a counter trend trade. So I almost considered circling that one in green. But again, you got a perfect measured leg down. This is 2 legs here, but this is 1 leg, then a correction, then your second leg. And it's almost a perfect measured move again. And that was another reason, you got your 2 legs down, you're probably going to get a couple of legs up again. And but the main reason I liked it was because it was more of a range day, and we were coming off of strong support. So even if it's going to go lower, it's probably going to bounce again and then turn down. But as you can see, it traded back up in here and got hung up. And and for all the reasons we just talked about, this is getting into the 1 o'clock hour. You're better off to be flat, and really you're better off to be flat here. But if you're good enough at reading the price action and you want to follow it, it's a breakout pullback short from this channel here, and it's a fairly decent setup. And there's a good chance that since we couldn't get through up here, we're probably going to go down and test the lows, which is what happens, and really we just keep going lower. When it broke below this, you see it failed and tried to come back up, which is what usually happens anytime you break out of something. And plus it's kind of a measured move down from the distance of this back down to here, and we'd already had support there all afternoon. So breakout pullback short. It's a little more aggressive for the reasons we just talked about. And then your news hits and all this starts going haywire, and you come back and test this again and make a lower high and turn down. This is one where when it broke lower, I would use a limit order, and I like to use those closes. If you get right in front of that 1 tick, it'll usually, don't ask me why, but it comes back and tests those. There's a reason why there's stem there, but it only closed there, and it comes back and tests it. And there was a second entry there, but I don't like, by that time it's starting to look too much like congestion, so if you weren't already in, I wouldn't have entered here. And this is just a breakout pullback short out of that little congestion area, but again, I don't like entering anymore. You don't know what it's going to do yet. You're better off to wait till it comes back and see if this is going to be a trend line. We get a little, you know, you got your line off those two. This kind of confirms that you get a nice reversal bar. Even with that little doji, you could have gone short below it. It's close enough. Easy scalp. It comes back, and then it kind of gets hung up, and it turns down there again. But now you got a failed second entry long there, and it's a second entry short counting off this low. Pull back first entry, pull back second entry. It's right off that trend line. Enough reasons to like it, and it's off to the races again. And then another little pullback. That's a breakout pullback from this area right here. You can see, and it's two legs back. Pull back, first leg up, a little pull back, and then second leg up. If you went to a smaller chart, you'd clearly see two legs up there, and then it turns down. So I liked waiting on this bar right here, really. But you could have gone short right there since it's off the EMA, the trend line, the support resistance lines, breakout pullback. You need to be thinking a measured leg like this one. There's leg one. You can see we didn't quite have the measured leg, and we really hadn't gotten back down to the trend line, which came right here, and we overshot it, but that's because we corrected a little bit early. That one's closer to it right there. So I like that one, and of course, you know, it bounces right off the suspected trend line. This is just a copy of this line. You can see that. And that was the last one of the day that I marked. There's actually another chance to get short right there that you possibly could have taken. Then there's a failed second entry long right there. It would have worked, but you've got a little room here, so you might have considered that one. And that was really it for the day. It's too late in the day after that. But that's what I saw for today. It was a little tough in here if you don't know how to handle ranges and draw these short-term trend lines. This was a fairly decent trend right here in a nice sized channel. Once the news came out, but that didn't start till 1 o'clock in the afternoon, and it's really late then. So this is what really trips people up. But just remember, on FOMC days, this is very common. You can go back and look, and an hour or 2 to 3 hours before, it just nothing happens. It gets just like this, and it's just futile to try to enter because only way to enter is just to buy and sell the highs and lows of the little range blindly almost. And if you did that, it probably worked until right here. That'd probably be the only one that failed. Otherwise, all of these would have worked. And it's so predictable that you can almost consider doing it that way if you really want to. It's a little more aggressive, but if you're good at reading the price action, it doesn't hurt to be more aggressive. So you probably want to be more aggressive. But that's what I saw today. Again, it's more of a range day with the trend, and then your shorter term trends within that, and you got the break, and we tried to make a new high, and we just couldn't get back. And that's common on a range day to get a trend line break and not get a new high because you can't get through the highs of the range where the strong resistance is at, and that's the problem right there. They weren't really selling it off, but there's just too much selling right here, or not enough buying, however you want to look at it. So, but anyway, we're 20 minutes into this thing. I'm going to wrap it up. I hope you had a good trading day, and we'll be back. We got a couple more days left in this week. We'll be back to do it tomorrow, but this is Mack with PriceActionTradingSystem.com, and we'll see you next time.